U.S. markets have three big reports coming out in the next 2 days that are going to set the tone for the U.S. stock market for the next month. But has the bad news already been priced in? This is your 12-minute trading market minute for Tuesday, the 11th of October. The three reports that we care about this week are all clustered in the next 2 days. First of all, tomorrow morning, October 12th on Wednesday, we have PPI final demand. This is producer price index or wholesale inflation. Now, when we look at this, we saw that the prior reading was actually quite optimistic, month to month closing down 0.1% negative. But the consensus number for tomorrow on Wednesday is going to be plus 0.2%. So any beat of that is going to be market positive. Anything that meets this or exceeds this number in the consensus range or beyond is going to be viewed as market negative. Now, don't get lost in the year-to-year headline number. No one cares about that. It's all about the month-to-month number where inflation is either rising or declining month to month. That shows the trajectory or the trend. And in case the 30 individual Fed speeches over the last 2 weeks didn't make it clear what the Fed's mandate is these days, we're going to review the minutes tomorrow afternoon at 2 p.m. Eastern Time. So once again, we're going to pick through the last Fed statement from a couple of weeks ago and see if there's anything new. I can't believe that there be anything new in the information in the Fed minutes, but I've been surprised by this before, especially this year. Lastly, on Thursday, we get the CPI, which normally precedes the PPI, but this one's different for whatever reason. This is the Consumer Price Index or retail inflation. Now, month to month, last month we had 0.1% positive, and that was a surprise to the upside. Everybody was expecting a negative number. So consensus this time should be easy to hit or exceed. It's currently positive 0.2%. Consensus range goes as high as 0.5%. If we hit a 0.5% number, look for the market to shed points very, very rapidly. A negative number would be considered a beat and would probably produce a positive number. Like we said, I think a lot of this negativity is already priced in. Now let's go look at the charts. Here's the S&P 500 cash index with the monthly, the weekly in the middle, and the daily on the right-hand side. This is a fractal family of timeframes. Now, the charts are not going to tell us, they're not going to predict which way the market's going to react based on those economic numbers. All we have right now is a certain expectation priced into the market. And considering the sentiment, it's rather negative right now. So I think most of the negative news is already priced in. So we could see a very positive surprise, if nothing else, to create the next lower high, maybe somewhere between 3,900 to 4,000 over the next few days if we do see an upside surprise, which would imply that the Fed may be open to pivoting earlier than expected. Now, if we see a negative surprise to the downside, I believe the next step for the S&P is going to be somewhere down here at about S&P 3,400. There's a ton of support down here as well as pivot support. Former resistance becomes new support. So to me, 3,400 is the next stop. This is where we also have a value area, a strong value area node setting up right around 3,400. That to me seems like the most likely area for the price to land if it were to drop. Now, keep in mind the bigger picture here. We have a tremendous amount of energy here at the monthly chart. This shows the potential for trending activity. This could unfurl a great degree to the downside before it's going to be exhausted. Now, the weekly chart has only got a limited amount of energy on tap before it too is going to be exhausted. So I'd say any move down to 3,400 would actually probably bring this into exhaustion, and we'd more than likely at some point as we get into the end of October, probably get a counter trend bounce bear market rally. Look at the amount of energy that's available on the daily chart. A massive amount of potential to trend for this. So this could easily bring the price up another 200 to 300 points in either direction. So what I'm looking at here is this combination of big economic numbers that everybody wants to see, as well as huge potential for trending. We're going to get some massive volatility in the next few days on the S&P. That starts with tomorrow's PPI number, and it continues with the Fed minutes as well as Thursday's CPI. Sometimes the numbers can be different, but what's not different is the potential for movement here. So hang on tight. We'll be back in the next market minute to wrap things up and to let you know how to trade the next trend. See you then.